How would you build your portfolio in order to make money off of this crisis, not let it go to waste, rather than just preserve capital?
When the gold rush really begins, anything with gold in its name or silver in its name will fly high.
But what happens when you add inflation to that mix? Don't you think that gold and silver producers will be massively hurt by inflation too, though?
You got to remember the stock market runs on psychology, not on logic.
I'm interested in your thoughts around it, how you would diversify it, again, if you were 26, within gold and silver. Like,
look, the only reason you want gold or silver is very rare.
And oftentimes when you call yourself the silver guru, so oftentimes when you talk to precious metals gurus like Alasdair MacLeod, James Derrick, yourself, and others, they would just say, just buy gold and silver and that's it. But here's an idea. What about building a diversified portfolio of good businesses? Maybe the ones which earn their money in a different currency, but have their main expenses in the one of the main currencies that you expect to lose their value quicker than others. Because, and here's one thing that, if this plays out with a crash like you think it could, most anything will go on sale, right? Good, stable businesses that pay high dividends and will profit from an economic setting going forward, they will also go on sale. And talking about Alasdair MacLeod, I spoke to him last week, I think. So he told me the story of Hugo Stinnes out of Germany, who Stinnes basically made a great fortune during the hyperinflation of the 20s in Germany by doing pretty much that same thing. Only he bought the actual physical businesses who had their expenses in marks, but their income in other currencies. So at least that's what I got out of it. So what do you think about trying something like that, but through the stock market instead of buying actual factories, like making a diversified portfolio of dividend paying companies? Does that make any sense to you?
No, you're thinking, and that's great. I mean, look, the only reason you want gold or silver is very rare. It's a place marker. It's a holding you in place. It's static. It's not dynamic. It doesn't do anything. All it does is help you have some capital when everything else, as you said, goes on sale. But, for money to work properly, it has to move. And that's why what you said makes absolutely perfect sense. The only reason I've been an advocate for holding wealth is because of the conditions that we're under, which almost requires you to have some static savings that is a fortress against almost any eventuality. But that doesn't mean everything. And it certainly is not the most productive use of capital. But if you could see what's coming, if you're on the train tracks and you can't escape, you see the train coming. If you've got something that's going to preserve you, then you're going to hold on to that. But no, you've got the right idea. I mean, the main thing to do is what I call the paradox of real capitalism. You can have a business that serves others and serves you at the same time, or serves your company or your employees or whatever. And there's a mismatch in some companies. I think we're becoming more aware of it. I call it conscious capitalism. But, if it's all about profit, then maybe you're missing the point. Certainly, you have to have a profitable business to maintain a business. But now we've got all these zombie corporations that are unprofitable and their debt is unsaleable. So the Fed buys it. I mean, we're not supposed to reward failure. And that's what we have done for too long. Going back to the beginning of our conversation, if it takes $5 of borrowing to get $1 of growth, well, what good is that?
That's true.
It's when you can buy $1 of growth for 50 cents and buy that business that everybody wants. Everybody wants to fill in the blank, have a vacation, have artisan bread, ride a roller coaster. I don't care what it is. It's, the market determines, the value of something if it's allowed to be free. And of course, these days, there's very little free market activity. There's some.
And that's very true. And as much of a worthless metric the PE ratio might be, if you look at the average PE ratio of the S&P 500 right now, you see it's at around 45, which would mean that for every $45 that you put into the S&P 500, you get $1 back in earnings. So I got to put $45. So I got to, if I don't have money, I got to borrow $45 to get $1, $1 back in earnings. How am I ever going to pay the interest back on that $45 if that's all that I'm getting forever? And the value of the collateral is declining. That's sort of the general thinking around that. So finding those good undervalued opportunities would make a lot more sense. And, obviously I do like that you're mentioning gold and silver. I am a gold and silver speculator myself, much more than an investor. So, and I also have some physical, but I'm interested in your thoughts around it, how you would diversify it again, if you were 26 within gold and silver, like, physical and then some miners and then some explorers and, royalties or whatever as speculations, or how would you look at this, David?
Well, that's hard to answer because I don't know your personality, but start with physical. I'll be very consistent there. And if you're so inclined to speculate, go ahead. I would, do a ratio where 70% of it or so is in real metal and maybe 30% you allocate to gambling, because a lot of these small stocks are gambles. But I wouldn't get carried away in that space. It's really easier to make money in the top tier cash rich companies than it is in the juniors. I would also say, if you're really interested in it, learn how to write covered calls. The beta on gold stocks is extremely high, so you can get that that $1 for 45 you just mentioned. In the options market, the options writer wins about 85% of the time. That's much better than Vegas. So you can rent your stock and get about a 15 to 20% yield annually without much effort. So that's something at your age that you might do as a sideline with your bakery or whatever. So, you know what, maybe that turns into your passion. I don't know. I'm not trying to guide you. I'm just giving you an answer. But there's lots of ways to make money in the market, and most people just don't take the time to learn it.
Mm-hmm. It's I like that answer as well. And then I wrote down something that you just said, is that it's much easier to make money on the stable companies, the producers. But what happens when you add inflation to that mix? Don't you think that gold and silver producers will be massively hurt by inflation too, though?
Not necessarily. It depends on how they're priced. But what I do know from years of study and experience is that when the gold rush really begins, anything with gold in its name or silver in its name will fly high, because people that aren't willing to go down to the coin shop, or maybe the coin shops are getting low on supply, who knows? Anything with gold or silver in its name will fly. And there'll be a lot of what we call moose pasture, which means some meaningless hunk of land that has no gold on it will take off and go from 12 cents to $12. I'm exaggerating, but there may be some cases like that. I mean, it'll be astronomical. It'll be a Bitcoin kind of move, because there's not much gold relative to the financial system. It's maybe 1%. So if that moves to 2%, it's going to move almost anything related to gold. And silver is even smaller. So you'd see. So you went to PE. So I'll just give you an example. In fact, this will be one of the metrics I'll be looking for on making a sale. But, do I sell for fiat? I keep talking about it being worthless. Probably won't be before the reset. I think it'll have value, but I have to determine that real time. But a good gold company sells about 35 times earnings. A good silver company about 50 times earnings. So there's pretty high multiples. It's up there to the S&P on silver. And that kind of makes sense when you think about it. But it's overvalued, right? That's a marker that it's time to get out.
But sure. And then, but at the same time, you also have to, I guess you have to have a company that is going to survive through the period where inflation has already started running, but gold hasn't caught up. Like, for example, gold's gone up maybe 1, 2, 3%, but then inflation is up like 25% or whatever in a hyperinflation type of environment. You got to have a company that's going to survive that as well. And those often don't come cheap.
No, you're going to have to, really build a overused word algorithm, the math model, and you have to look at your inputs. And if one of your big inputs for most mines is fuel, diesel, so or electricity or both, and if your input costs exceed what your output is, gold's moving up and up and up, but it's not keeping above what your input costs are. You'd have to put the mine on maintenance or sell it or something. So they're very cognizant of all the details that would go into whether or not you want to buy a particular mining company. And when you get into the distortion of a high inflationary environment that's extremely hard to determine, you got to remember the stock market runs on psychology, not on logic. So you could have a math model showing that the gold company is absolutely losing money because the energy costs are greater than the production of gold, and it still flies high. Why? Fear. People believe gold's the way to be. It's going to protect them. And even though the company's not going to make any money for the next year based on input costs, it still flies. So I just have to throw that out there because I've seen that. And so there's more to the story than just, always thought I could beat the market with my math background. And I got humbled again and again and again. I had to unlearn what I thought I'd learned. Certainly I use math now. I still do. But that's part of it. A lot of it's psychology.
Okay. So if I'm 26 looking to make money, maybe I should spend more time studying human behavior rather than mathematics. Mathematics are important too, I guess.
Yeah, read Popular Delusions and the Madness of Crowds by Mack.
That's an old book, right?
Yeah, very old. It's about bubbles, and you might be able to find some cryptos that fit that description.
No, I appreciate that. David, I see that we are hitting the hour. You told me you only have that much time. I did want to talk about energy and platinum, all these things, but maybe